What is happening, crypto enthusiasts? Welcome back to Bitcoin Bulletin, your ultimate source for the pulse-pounding news that shapes our digital asset world. The market is moving at warp speed, and if you're not plugged in, you're missing out on the seismic shifts happening right now. We've got a packed show today, bringing you the updates you absolutely need to stay ahead of the curve. Get ready, because the next wave of innovation and strategy is hitting hard, and we're here to break it all down for you. Let's dive into the headlines that are making waves. First up, we're talking about massive moves in institutional adoption and the ambitious vision of Bitcoin reaching that coveted $1 million mark. This isn't just about holding, it's about strategic plays that could redefine the entire investment landscape. We'll explore how major players are positioning themselves for what could be a monumental climb. Then, get ready for a stablecoin revolution as Tether teams up with the RGB protocol to bring USDT natively to the Bitcoin network. This partnership promises enhanced privacy, offline transactions, and a whole new level of utility for both Bitcoin and stablecoins. It's a game changer that could unlock unprecedented accessibility and functionality. Next, we're dissecting a major corporate strategy amidst legal scrutiny. One of the biggest names in Bitcoin accumulation is facing legal battles, but they're doubling down on their BTC bet. We'll get into the details of the ongoing challenges, the market's reaction, and what this means for their massive $59 billion holdings. And finally, we're shining a spotlight on regulated firms pioneering a new era for institutional Bitcoin investing. Discover how established players are navigating the crypto waters, driving adoption, and setting new standards for how institutions engage with digital assets. Don't go anywhere, because these are the stories you can't afford to miss. Stick around. Make sure you hit that like button, subscribe to Bitcoin Bulletin, and ring that notification bell so you never miss an update. Institutional Bitcoin adoption scales new heights. Get ready for a seismic shift in the world of digital assets as the conversation around Bitcoin's potential to reach the $1 million mark intensifies, driven by strategic institutional adoption. This isn't just a price prediction. It's a narrative being actively built by major financial players and forward-thinking corporations looking to leverage Bitcoin as a cornerstone of their investment portfolios. The sheer scale of this movement suggests a fundamental reevaluation of Bitcoin's role in global finance, moving beyond its speculative origins to become a recognized store of value and a strategic asset for long-term wealth preservation. The current landscape sees institutions not just dabbling, but making significant, calculated investments, often through regulated channels that provide a sense of security and compliance. This approach is crucial for bridging the gap between traditional finance and the burgeoning digital asset space. Firms are increasingly adopting sophisticated strategies for allocating capital to Bitcoin, focusing on how to integrate it into existing financial frameworks while managing the inherent volatility. This involves exploring diverse investment vehicles, from direct holdings to more complex derivatives and funds, all designed to meet the stringent requirements of institutional investors. Furthermore, the discussion around Bitcoin's scalability is intrinsically linked to its potential for widespread institutional adoption. As more capital flows into the network, the demand for efficient, secure, and cost-effective transaction methods becomes paramount. Innovations in Layer 2 solutions and other technological advancements are playing a critical role in addressing these scalability concerns. The goal is to ensure that Bitcoin can not only accommodate large-scale investment, but also facilitate a growing number of transactions without compromising its core principles of decentralization and security. This technological evolution is key to unlocking Bitcoin's full potential as a global financial infrastructure. The ambition for Bitcoin to reach $1 million is not merely a speculative aspiration, but a reflection of the fundamental shifts occurring in how value is perceived and stored in the 21st century. Institutions are recognizing Bitcoin's unique properties, its scarcity, its decentralized nature, and its growing network effect as powerful drivers of long-term value appreciation. This strategic allocation by institutions is creating a powerful network effect of its own, attracting further interest and capital, and potentially creating a self-fulfilling prophecy for its ambitious price targets. The market is watching closely as these strategic plays unfold, understanding that they could set the stage for a new era of financial growth and opportunity. Now, hold on tight as we pivot to a development that could supercharge stablecoin utility on the Bitcoin network itself. Tether's bold move: USDT lands on Bitcoin via RGB protocol. Prepare for a significant evolution in the stablecoin landscape as Tether, the world's largest stablecoin issuer, announces its strategic partnership with the RGB protocol to bring its USDT stablecoin natively to the Bitcoin network. This groundbreaking integration is poised to unlock a new era of functionality, enabling direct USDT transactions on Bitcoin, facilitating offline transfers, and allowing users to hold both USDT and Bitcoin within a single, unified wallet. This move marks a pivotal moment, aiming to enhance Bitcoin's utility by embedding stablecoin capabilities directly into its core infrastructure. The integration leverages the power of the RGB protocol, a sophisticated system designed for the creation and management of tokenized assets on the Bitcoin blockchain. By utilizing RGB, Tether's USDT will benefit from the Lightning Network's advanced features, including enhanced privacy, client-side validation, and instant settlement capabilities. Tether CEO Paulo Ardoino highlighted the project's commitment to developing a stablecoin that is truly native, lightweight, private, and scalable on Bitcoin, aligning perfectly with the foundational principles of the world's premier cryptocurrency. This synergy promises to deliver a superior user experience, merging the stability of USDT with the robust security and decentralization of Bitcoin. This expansion signifies Tether's ongoing commitment to cross-chain interoperability and innovation within the digital asset ecosystem. With USDT already supported across 20 diverse blockchain networks, including Ethereum, Tron, and Solana, its arrival on the Bitcoin network via RGB represents a significant leap forward. Concurrently, Tether is streamlining its operations by phasing out support for USDT on 6 less utilized blockchains: Algorand, Bitcoin Cash SLP, EOS, Kusama, and OmniLayer, effective September 1, 2025. This strategic consolidation allows Tether to focus its resources on networks offering the greatest potential for growth and integration, such as Bitcoin. The timing of this announcement is particularly noteworthy, coinciding with Tether's record-breaking performance in Q2 2025. The company reported substantial net profit margins and a significant increase in its workforce, including the strategic appointment of former U.S. crypto official Bo Hins as an advisor. Furthermore, Tether is actively developing innovative products, such as the AI-powered QVAC keyboard, designed to facilitate secure and rapid transactions using its proprietary QVAC technology. These developments underscore Tether's aggressive growth strategy and its dedication to enhancing user experience through cutting-edge technological integration. The RGB protocol, recently updated to version v0.11.1, is at the forefront of enabling advanced functionality on Bitcoin without compromising the network's inherent security and decentralization. The RGB Association, backed by prominent industry partners like Bitfinex and Fulgur Ventures, is spearheading the protocol's development and promotion, signaling strong institutional backing for expanding Bitcoin's capabilities beyond simple peer-to-peer transactions. This collaboration is set to redefine the utility of Bitcoin, potentially driving wider adoption for everyday transactions and establishing it as a foundational layer for global financial infrastructure. But what happens when a corporate titan, synonymous with Bitcoin itself, faces a legal storm while continuing its aggressive accumulation? We're diving into that next. Corporate Bitcoin titan faces legal headwinds amidst $59 billion bet. In a dramatic turn of events, MicroStrategy, now operating under the rebranded identity of Strategy, finds itself at the center of a legal storm as a class action lawsuit alleging securities fraud has been filed against the company and its leadership. Despite these significant legal challenges, Strategy has not only continued its aggressive Bitcoin accumulation strategy, but has also expanded its holdings, demonstrating a steadfast commitment to its digital asset-centric vision. The firm recently bolstered its reserves by acquiring an additional 7,390 Bitcoin for approximately $764.9 million, pushing its total holdings to a staggering 576,230 BTC, now valued at over $59.2 billion. This bold move underscores Strategy's unwavering conviction in Bitcoin as a primary corporate treasury asset, even as it navigates complex legal and regulatory scrutiny. The lawsuit, filed in the U.S. District Court for the Eastern District of Virginia, names key executives, including CEO Michael Saylor, President and CEO Phong Le, and CFO Andrew Kang, as defendants. The core allegations revolve around violations of the Securities Exchange Act of 1934, with claims that the company and its leadership made misleading statements or failed to disclose material information concerning the profitability and risks associated with its Bitcoin investment strategy. Specifically, the suit targets alleged misrepresentations regarding the company's ability to manage Bitcoin's inherent volatility and maintain profitability. This legal battle poses a significant challenge, potentially impacting the company's financial standing and investor confidence. However, the cryptocurrency community has largely rallied behind Strategy, with many observers dismissing the lawsuit as lacking substance. A prominent developer associated with DeFi Llama, 0xNGMI, argued on X that Strategy's well-established identity as a Bitcoin-focused entity, a stance maintained for years, makes the fraud allegations questionable. This sentiment reflects a broader understanding within the crypto space of Strategy's transparent and maximalist approach to Bitcoin. The eventual withdrawal of the lawsuit in August 2025 further suggests that the claims may not have withstood legal scrutiny, potentially sparing the company from prolonged financial repercussions and allowing it to maintain its strategic focus on Bitcoin acquisition. Strategy's pioneering approach to corporate Bitcoin treasuries has also begun to influence global corporate finance trends. Companies like Asia Strategy, a luxury watchmaker that adopted a name change to align with the burgeoning trend, have announced similar Bitcoin treasury plans, often in partnership with crypto-focused venture firms. Similarly, a catering company based in Bahrain has publicly embraced a Bitcoin treasury strategy, collaborating with investment firms to integrate digital assets into its financial reserves. These international adoptions highlight a growing global recognition of Bitcoin's potential as a reserve asset, although the long-term sustainability and regulatory implications of such strategies are still under examination. Internally, Strategy's governance structure has seen shifts, with Michael Saylor's voting control diluting from 51.7% to 45.2% due to a substantial $42 billion capital raise. This has necessitated the formation of independent governance committees, including a nominating committee, to comply with NASDAQ listing rules. Despite these structural changes, Saylor remains a vocal advocate for Bitcoin accumulation, occasionally creating friction with a board increasingly focused on risk management. The implementation of Financial Accounting Standards Board, FASB, Accounting Standards Update, ASU 2023-08, mandating mark-to-market accounting for crypto assets, has also brought challenges, revealing a $5.91 billion unrealized loss in Q1 2025 and raising concerns about potential tax liabilities, which contributed to a recent stock price decline. Now, let's shift our focus to how regulated financial firms are leading the charge in institutional Bitcoin adoption, paving the way for a new era of crypto investing. Regulated firms ignite institutional Bitcoin adoption wave. In a significant development for the digital asset landscape, a growing number of regulated financial firms are spearheading a new era of institutional Bitcoin adoption. These established players are not only navigating the complexities of the cryptocurrency market, but are actively pioneering innovative strategies for institutional investment in Bitcoin. By leveraging their existing infrastructure, regulatory compliance frameworks, and deep market expertise, these firms are creating trusted pathways for capital to flow into Bitcoin, thereby demystifying digital assets for a broader institutional audience and setting new benchmarks for engagement. Amdax, a prominent example in this space, exemplifies this trend by meticulously developing a regulated environment for institutional Bitcoin investing. The firm's strategy centers on building robust platforms that meet stringent regulatory requirements, ensuring security, transparency, and compliance. This approach is crucial for attracting institutional capital, which often operates under strict mandates regarding asset custody, risk management, and reporting. By offering regulated avenues for Bitcoin exposure, Amdax and similar firms are effectively bridging the gap between traditional finance and the digital asset world, making Bitcoin accessible to a wider array of institutional investors who prioritize safety and adherence to established financial protocols. The focus on regulated adoption extends beyond mere access. It encompasses the development of sophisticated investment products and services tailored to institutional needs. This includes the creation of secure custody solutions, compliant trading platforms, and innovative investment vehicles, such as Bitcoin-backed funds and derivatives. These offerings are designed to align with the risk appetites and operational requirements of institutional players, facilitating strategic allocation and long-term investment horizons. By providing these structured opportunities, regulated firms are not only increasing the liquidity and accessibility of Bitcoin, but also enhancing its legitimacy as a global asset class. This institutional influx, driven by regulated entities, is fostering a more mature and stable market environment. As more institutional capital enters the Bitcoin ecosystem through these trusted channels, it contributes to reduced volatility and increased market depth. Furthermore, the active participation of regulated firms in Bitcoin adoption signals a broader acceptance and integration of digital assets into the mainstream financial system. This trend is likely to accelerate as regulatory clarity improves and more institutions recognize the strategic advantages of including Bitcoin in diversified portfolios, aiming for long-term growth and inflation hedging. The pioneering efforts of firms like Amdax are critical in shaping the future of institutional finance. Their commitment to regulation and compliance is building the necessary infrastructure and trust for Bitcoin to achieve its full potential as a global store of value and a medium of exchange. As these trends continue to unfold, the strategic allocation of capital by institutions, facilitated by regulated intermediaries, will undoubtedly play a pivotal role in the ongoing evolution and mainstream acceptance of Bitcoin and the broader digital asset market. That's all the top stories for today, but we've got a quick recap coming right up. And that's a wrap on today's Bitcoin Bulletin. We covered the massive potential of Bitcoin hitting $1 million driven by institutional adoption, Tether's game-changing partnership bringing USDT natively to the Bitcoin network via RGB, Strategy's bold continuation of Bitcoin purchases amidst legal challenges, and regulated firms like Amdax pioneering a new era for institutional Bitcoin investing. Don't miss out on any of these critical developments. If you found this update valuable, smash that like button, subscribe to Bitcoin Bulletin for more cutting-edge crypto news, and ring the notification bell so you're always in the know. Connect with us on all our social media platforms to join the conversation and stay updated 24/7. Until next time, stay informed and stay invested.